Hey, what's going on everybody? Leo Invest here, back with another YouTube video. This video I'm going to be recapping a long position that actually just happened on Monday, June 9th of 2025. And the reason why I feel like this is an important recap for me to go through is it's kind of the pinnacle of candle to unicorn models. And what do I mean when I say an A+ setup or when I'm taking an A+ setup trade? Well, this would be a very good example. And just before we get into this video too, I do want to specify that I did not take this trade. This recap is purely for educational purposes for those of you trying to learn the base fractal model and adding layers of confluence like the candle to unicorn model. So jumping right into it here, what did we see happen after this New York PM session close, right? As we know, we had a slow grind down from this 12 PM session where NASDAQ and ES created SMT at the highs before NASDAQ finally created a bearish leg down back into around that New York mid-range. And then what did we see happen after market close? So from 4 o'clock up until 8 o'clock, well, we saw a very slow bullish move followed by an aggressive bullish move higher. But what did we see before this bullish move that would have given me more confluence for a potential A+ trade setup? Well, when we just look at this here, what exactly do we see is happening right here? Well, as I've mentioned in quite a few of my videos and my live streams, many of you know that market moves in 3 ways. We have accumulation, manipulation, and distribution. And this is always going to be the case for these higher term setups, these high quality setups. You look for some type of accumulation during some type of trend. So in this example here, we see that NASDAQ created a bullish trend followed by an accumulation. And then what did we see happen next? Well, outside of this accumulation, we manipulated the low of this accumulation phase here, marked in the red box, before we had a distribution higher. So now let's break down more of the layers of confluence that would have signaled me into a high quality long position by utilizing the base fractal and then adding it to be the TTrades Fractal and candle to unicorn. Well, here after this accumulation phase, what exactly did this do? Like, what did we see happen? Well, we have this 7 o'clock candlestick, which created the 7 o'clock low, as well as this 6 o'clock candlestick low here. And so when we look at market, we mark out these zones, what exactly do we see is happening here? Well, we see a manipulation below and a sweep below this higher time frame candlestick low. And so what I mean is when we look at these hourly candlesticks, I want to see some type of manipulation or some type of liquidity sweep below a higher time frame candlestick low before seeing a reversal signature form. And so if I just mark this out here as our 7 a.m. low, which I'll have here, we have our 7 a.m. low here, and then we see the formation of the 8 o'clock candle that forms at this bearish candle. And what do we see after this 8 o'clock? We have a 3 candle body down closure, which sweeps the 7 o'clock low before creating what you guys have seen in quite a few of my videos, a change in state of delivery, which was formed at the top of a undisrupted candle body move to the downside. And so these 4 bearish candlesticks here actually form a change in state of delivery, which we now can anticipate a potential reversal or a continuation higher in this case, if we see a candle body closure above. So once again, to reiterate, what did we see? We saw an accumulation phase. We first saw that NASDAQ had this light bullish move here before we had this more intense accumulation phase. Then we saw after this accumulation that NASDAQ manipulated the lows of some higher time frame candlestick lows, aka the 6 o'clock low, as well as the 7 o'clock low. Then we saw the formation of a bullish change in state of delivery that had formed here as well on this time frame, signaling a potential long entry if we got a candle body closure. But let's say you took the base fractal model entry on this trade and you enter at the closure of this change in state of delivery on the 5-minute with your stop at the change in state of delivery lows. This would be a very valid trade setup because we have multiple layers of confluence as well as are utilizing this manipulation and higher time frame candlestick sweeps to validate a long signature. And so as the fractal states, once you enter a fractal model, you typically shoot for a 2-to-1 risk to reward ratio. But let's say now you're not interested in taking a potential 26.5 point stop, right? For some of you that may have smaller accounts or maybe just don't want to risk as much in a trade, you can utilize other layers of confluence to help you map out where you can potentially put your stop losses on this trade. And so once again, this is the base fractal model. You are targeting 53 points while risking 26.5 points. But let's now take the reverse. What if we want to manage our risk accordingly? Well, before the 7 o'clock sweep, what did we see form here on the 5-minute time frame? Well, we saw a breaker block form on this bullish candlestick here. So we saw a 5-minute breaker form on this candle. And as you guys know, with the candle to unicorn, when we see a C2 sweep of a low and a breaker block form, and in this case, this was a bullish breaker block, we want to see a closure above this breaker to validate us as well into a long position. So if you did not want to take a long with a 26-point stop, you can now utilize the candle to unicorn, map your stop, wait for a closure above this breaker, which we see here at this 825 candle right here. And then you can enter a long position at that candle body closure with your stop just below that breaker, about a point or two below, just in case we wick back into that breaker. And the candle to unicorn then also targets a 2-to-1 risk to reward ratio. And so even though this was not as high of a profit trade, as you're only risking 9 points to make 18, this is a way to take an A+ trade setup by utilizing the fractal as the base and adding layers of confluence to help you manage your risk more accordingly. And so this would have been a completely valid candle to unicorn bullish A+ setup. And so this is a great example, but then let's say you wanted to potentially see market go further. Well, the fractal model also will print where you want to see those standard deviations be. So I'm going to turn on the fractal model indicator for you all to see kind of where those standard deviations lie. And typically with good A+ fractal model setups, you can anticipate that market is going to move into this -2 to -2.5 standard deviation before having some type of potential retracement and then a continuation higher. And so we can use this -2 to -2.5 standard deviation, but we can also use the highs of today's market, this 12 p.m. high here, the New York session high, the New York PM session high, as potential draws on liquidity for this long position. So if you had entered with the original fractal model entry, you would have your stop below that breaker or below the change state delivery and target the 2R on this trade, which is just above that -2.5 standard deviation, but also does tap into those 12 p.m. highs. But if you were to take a breaker block entry here with the candle to unicorn, your stop would be just below this breaker, about a point or two below. And then you could also target that -2 or -2.5 standard deviation, which could yield anywhere from a 3R to a 4R A+ setup on this trade. So just thought this was an important little video for you all here, trying to better understand the candle to unicorn in the TTrades Fractal Model. And if you did enjoy this video, please feel free to like and subscribe for more videos like this one, and I will catch you all in the very next video. Bye now.